You know what nobody tells you about retirement? The rules can change overnight while you're sleeping. And that's exactly what just happened. The federal government quietly rolled out a new tracking rule that directly affects anyone collecting Social Security, retirement, disability, or supplemental benefits. This isn't speculation, this isn't clickbait, and it's definitely not a conspiracy theory. It's real, it's already in effect, and it's changing how your financial activity is monitored moving forward. Now, before panic sets in, do me a favor real quick. Take a breath and listen carefully, because what I'm about to explain is going to cut through all the fear-mongering you've probably seen online. Quick favor before we go any further. If you're on Social Security now, or you plan to be someday, hit the like button. It tells YouTube this is important information and helps other people see it too. Let me be crystal clear right out of the gate. The government is not trying to steal your Social Security check. They are not monitoring every dollar you spend, and they are not taxing birthday money you send to your grandkids. What is happening is this. The IRS and the Social Security Administration are now sharing financial data more closely than ever before, using new reporting requirements placed on banks and payment platforms. That means transactions are being reported more consistently, cross-referenced automatically, flagged when they exceed certain thresholds. And here's the part that surprises most people. The majority of people affected have no idea this is happening. But by the end of this video, you will know what this rule actually means, who it affects, what you need to do, and just as important, what you do not need to worry about. So stick with me. I know it's terrifying. You work your whole life, 40, 50, sometimes 60 years paying into the system. The last thing you want to hear is that the government changed the rules again. But here's the truth. Fear sells. And there are plenty of people online making very good money scaring retirees half to death. So let's talk about what's actually going on. This new tracking rule is part of a federal effort to close what's called the tax gap. The difference between what people owe in taxes and what actually gets paid. According to the IRS, that gap is roughly $600 billion a year. That's not millions. That's not even tens of billions. That's $600 billion every single year. So the government looked at that number and said, we need better visibility. And that's where this rule comes in. Under the new requirement, financial institutions and payment platforms like PayPal, Venmo, Cash App, Stripe, and others must report accounts that receive more than $600 in transactions during a calendar year. That report comes in the form of a 1099-K, which goes to UMI and the IRS. Now, let me slow this down, because this is where people get confused. This does not mean you automatically owe taxes. The government is taking $600 from you. Your benefits are being cut. It simply means the government wants visibility. They want to confirm whether income should have been reported. That's it. Here's where Social Security enters the picture and why so many people are nervous. If you're collecting retirement benefits before full retirement age, there are limits on how much you can earn. For example, in 2024, the earnings limit was about $22,000. For every $2 over that limit, Social Security withholds $1 in benefits. If you're on disability benefits, the rules are even stricter because you're certifying that you're unable to work due to a medical condition. So when income suddenly shows up that doesn't match what Social Security has on file, that raises red flags. And now, thanks to this new tracking system, those discrepancies are easier to spot than ever. Let me be very direct here. This system is not designed to punish people following the rules. It's designed to catch unreported income, people working while claiming disability, side hustles that contradict benefit eligibility. And yes, those cases exist. When people cheat the system, it weakens Social Security, drains funding, hurts future beneficiaries, including your kids and grandkids. So if you're doing things the right way, this changes absolutely nothing for you. Let's clear up some common situations. Selling personal items online. If you sell old furniture, collectibles, or garage items for less than you paid, that's not income, but you need records to prove it. Hobbies that make money, crafts, woodworking, jewelry, knitting. If you're selling items, that's income. You can deduct expenses, but you must track them. Gifts and reimbursements. Money from friends or family, not income. Paying you back for lunch, not income. The key is properly labeling transactions and keeping documentation. What not to do this is where people get into serious trouble. Don't split payments to avoid thresholds. Mark business income as friends and family. Hide income in cash or checks. That's no longer a mistake. That's intentional fraud, and the penalties there are far worse. Disability benefits, higher stakes, stricter rules. If you're collecting SSDI or SSI, pay very close attention. Social Security uses something called Substantial Gainful Activity, SGA. In 2024, that threshold was around $1,500 per month. Exceed it regularly without reporting? You could. Lose benefits. Owe years of repayments. Face permanent disqualification. The scary part? With automatic data sharing, these cases are being flagged faster than ever. What you should do right now. Here's your action plan. 1. Know your reporting requirements. Call Social Security directly. Get answers from the source. 2. Keep excellent records, receipts, invoices, notes, everything. 3. Understand gross versus net income. A 1099-K shows gross numbers. You must explain the difference. 4. Fix mistakes. Early amended returns and voluntary reporting are far better than getting caught. 5. Get professional help if needed. A tax professional or Social Security attorney can save you thousands. This new tracking rule is not the end of the world. It's not the government stealing your benefits. It's not mass surveillance. It's not a reason to panic. It's a tool to identify fraud. And if you're following the rules, you're fine. But awareness matters, understanding matters, and preparation matters. If this video helped you, hit subscribe so you don't miss future updates like this. Drop a comment if you have a question or want a follow-up video on your specific situation, and share this with someone who's on Social Security and might be confused or worried. Knowledge beats fear every single time.